Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 5th of December, 2019. Thanks for showing up here again today and the prior days and keeping showing up. I'm glad you're here. This is episode number 1652. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment this morning is tilting slightly to the risk-on side with the Euro Stoxx 50 leading the pack up 15 points, trading at 36.71 even, up 0.41%. The NASDAQ follows up 29.5 points, 0.36% up. The bonds are the laggards, down 19 ticks on the futures from yesterday's settlement, 0.37% on futures prices. Euro Bund down 53 cents or 30%, 0.3%. 30% would be crazy. So that's where we stand. Gold has recovered a little bit from its lows. It's down. It's up. It's just 60 cents, trading at $1,480.08. Very important commodity to watch. Hopefully, I'm coming out to you nice and clear. This morning, there isn't all that much to report. We still have the same kind of mess or drivers. A lot of the action, as you may have noticed, is taking place overnight. The news-based stuff. So it's really not nothing new here. Essentially, the same drivers. In addition to the highlight of crude now, with crude being something that everybody's watching, given the OPEC meeting. The overnight news feed shows quite a bit to do with crude. Iran's comments from Iran, the Russian energy minister Novak, Saudi oil minister, Libya's head of the national oil company, and so on and so forth. And that's kind of twisting things around. Yesterday, crude had a big pop, a 2 standard deviation plus move from close to close, and so crude has pushed through that key 57.28 area and is pushing out of the recent balance on this news stuff. There's the tweeter-in-chief also tweeting away, and so on. And so it's another day of this kind of a grind. It's not that fun of a trade. The market's stuck a little bit in this high volume area around 31.14. We're teetering above and below. We'll go over that here in a minute. In terms of scheduled releases we need to plan for today, we did get balance. A trade came in slightly better at 47.2 billion deficit versus 48.7 billion expected. And there's the IV PMI out of Canada that's coming out, expected at 53.8. High impact number for Canada's markets. And then we get factory orders at 10 a.m. U.S. factory orders expected to be a low impact number. The Eurozone is having its ECOFIN meeting, so there may be comments coming in from that. I want to remind you, though, that tomorrow is non-farm payrolls and unemployment. Not only that, but we also get Michigan sentiment. So we get non-farm payrolls at 8:30 tomorrow morning. The forecast is 175,000, consensus 180. The prior is 128,000, and the unemployment rate's expected to inch up a little bit to 3.7%. So that's going to be a key driver. And then after that, we do get 10 o'clock, we do get Michigan sentiment, the prelim number for December, expecting 95.1, prior is 96.8. So tomorrow's a big day, so we do expect some potential squaring up before the close, hedging, and so on and so forth. So We saw a little bit of that yesterday into the close, I think. So let's take a look at what was expected yesterday versus what we got in our review segment, which is more like let's keep ourselves honest segment. Yesterday, we were opening in a gap at the time of the trader bite. As you can see up here, 3107 is the last print. And the primary expectation is for a dip, but overall was looking for the market to push up, balance out in the 3110, 3111 area, and then ultimately push towards 3120. Okay, get into this balance day on Monday, or get into this range on Monday, which brings us into that big key 3119 area, and I expected it to kind of chill in the 3119 area. Here's what actually happened. Let's see if we can, we can capture it all in our Renko chart. Market dips down a little bit, is staying below the mid in an open auction. At the time, I was seeing indications that it's slightly weak, and I expected it to dip further into 3100. It did not. It rotated back up, and we get our first impulse of the day. Look at that big rotation up above 6.5 points. So only longs from that point forward, and we end up pushing up to where we end up pushing up to 3112, right into that 3110 quarter prior low and the 3111 key area from 2 weeks ago. And then from there, we push into the naked point of control at 3114, 3114 and a half. And we consolidate, just for those of you who watch the old webinars from futurestrader71.com, the webinars I did for charity 2010 through 2012. Remember that once we get into a point of control, a naked point of control, the expectation is the market is likely to balance out. Why? Because a point of control, by definition, is capturing the high volume price, the accepted price, and when we move back into that area, it is natural for the participants to see that as the most recent, most accepted price in the area. If you remember, I used the peanut butter jar or the price of a loaf of bread. If a price of a loaf of bread is $3 and price dips to $1, then we are likely to see a lot of people rush in and buy as many loaves as they can. That to a limit, of course, because it's a perishable item, which is not a good example, but they'll buy up as much as there is supply. So you'll see that at $1, the bread is not going to stick around at that price a long time because value is $3, right? We accept the price at $3, and so as the price of bread starts climbing, as buyers come in and the sellers start pulling their offers and looking for higher prices because everybody's chasing profitability. As prices move to $3, now we likely are back to where value is, and we are likely to spend a lot of time there. And then because we're spending a lot of time there, the transactions would continue and rebuild in that area, and that's the chop. That's how this chop occurs. So we spend an awful lot of time up here. Now, what do? We put in a point of control yesterday at 3114 from 3114.5 naked point of control. That's the old naked point of control. So the market shifted back into balance. And what this shows, the reason I'm getting into all this stuff that may sound like it's useless information, is what it shows is that the market has tested below this 3111 line. Very important line. Look at it. Just look at the chart. This is a 15-minute chart. And we've traded below it. We've traded above it. We've tested from above. Like 3111. Really important, right? So we've tested from below, we've tested from above, and then we pushed through and we pulled right back to it on the close yesterday. And what this is saying is, this is too cheap. This is too cheap. The prices that we had on Tuesday were too cheap, and we are back in balance up here with the most recent area of acceptance. And so the market continues to hold here. Look at the overnight point of control. Where's the overnight point of control? The overnight point of control, 31.1050. Again, around that low, around the 31.11 area. Very important area, as I mentioned yesterday. Still very important. It's kind of like the over-under line. And what the market has done is it's tested below. It's tested below and has moved back up, has moved value back up to higher prices. This is what we've learned from the action over the last couple of days. This is a crash course, a brief crash course, I guess, in auction theory and how the market responds to valuation, to supply and demand. Let's take a look at the overnight session. The overnight session is telling us that we sold off pretty good on the close here. Had pretty good volume. Let me maximize this. Pretty good volume on the close. Sold off. Price moved down, but the delta didn't really shift lower very much. This looked like it wasn't very well participated, even though there was quite a bit of volume there. We see that the delta did not get hit that badly into the close, given the shift of price. And on the reopen, we go and we balance out yet again in that 31.11 area long enough to create a point of control that has held. And then we finally break higher on the European Open, which is right here. We break higher, we retest the mid, and we squeeze up and hold sideways. We end up with a funky looking double distribution profile on pretty good volume. So that's what's in front of us. It's quite positive. The overnight inventory looks to be just slightly on the buy side. So long, and we're trading right up against yesterday's highs, day session highs. So that's what we glean from the overnight session. Let's take a look at ctbookmap.pro. CT Bookmap is showing us that overall, pretty active session overnight. We've pushed through some key areas. 31.19, if you see, as you see here's had quite a bit of liquidity. This is an important area. You can see I have a 6-tick stock zone there, and it blew through and it came right back and is holding steady here. This is classic, resistance turn support type of situation here, and we still have pretty good liquidity at 31.25. If you recall from 2-3 weeks ago, 31.23.5 was an important area, and we are up against it again. This is why I have this other 6-tick stock zone. Stock zones happen to be 6 ticks each in this region, but it's not necessary that they're 6 ticks deep. The depth of the stock zone is a function of what confluence or what's happening in that area. And so I use 6 ticks as a marker for a small area. If there's a lot of confluence there, it can be as thick as it needs to be to encompass that whole area. And so, overall, when it comes to the full depth liquidity, you can see that below us, not too much. Above us, 31.23 to 31.25, and 31.30 has got pretty solid offers up there, and the all-time high is 31.55. So there's quite a ways there. We'll see if today starts to walk us into that 31.30, which is what's expected. But overall, the market's likely to move towards liquidity. We'll see if that's the case. Let's move on to our plans for today, since I've used up all my time doing a crash course here. Let's move on to our scenarios. But again, I'm going to trouble you in case you have not taken the time to sign the petition, ft71.com/MCL. Please take the time to do so. I have not set up a meeting with the head, the director in the CME who's in charge of this, but it's been a terribly busy week, as all weeks are. But I intend to bring these results to them. I was hoping it would be more subscribed or more participated. We haven't reached 2,000. If you know traders out there, if you're in a trading group or whatever, please put it in front of them and get them to sign on. Let's take a look at what's expected for today. Today presents us with actually some pretty decent opportunities, because we have very clearly defined areas above. Notice the overnight high lines up with the top of the top of balance in from the selling day on Monday, and the overnight low lines up with the bottom of balance in yesterday's. The bottom of our volume, heavy volume, was from yesterday. Let me turn on my stock zone areas. So with that being said, we're expected to open in range or just slightly out of it. I'm expecting the market to respond a little bit, move towards this 31.15, 31.14 area. I expect it to get tangled up in here and then eventually squeeze higher and move above the 31.25 area and start walking its way to 31.34 before we balance out into the close and push lower. Again, this is driven by the fact that we have tested below and we have rejected those prices. Okay? Be careful with the news. At any one time, you can be broadsided by a freight train because people are tweeting and they're just gaming the markets on both sides. Be careful with the news. It could nullify any scenario that we decide to put out. The secondary is that we have a base from yesterday. We've got a pretty good balance area, and we've held up pretty well. We could have an open auction that then breaks higher, consolidates around the 31.25 area, squeezes, and then falls back in to finish sideways in anticipation of non-farm payrolls yesterday. So not a huge commitment by buyers ahead of the number, and so we might end up going sideways. Scenario 3 is a test higher that rechecks, because we do have a gap zone beneath us. So we're in a gap zone here. This whole region is a gap zone. So the third scenario is a test up, drive down, consolidate in the 31.11 area, and then let go to push into 31.01 through the 3100, and then move into to fill in the gap, and then down at 91 for the bounce. That's scenario 3. Anyway, I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow. Please don't forget to take a moment to fill out the petition. Good luck. Take care.